Joining us in an exchange exclusive is Western Digital CEO Irving Tan. Irving, it's great to see you again. Welcome.
Hey, Kelly, thank you very much for having me on your show again.
I assume when analysts say they're worried about your capacity, they want more. Is that what they mean? Is that what they're looking for and what the market needs right now is more capacity? Or is there concern that there is more capacity coming online, which could dent the strong run we've seen?
I think the focus really is on the increasing demand that we're seeing from customers, right? We highlighted just 2 months ago that we thought that the demand for storage requirements were going to be about a 25% CAGR rate going forward, and it's more trending to 30% from what we see right now. And so the concern is the industry, and are we as Western Digital able to meet that supply? And we feel confident that we can. It's really our focus is less around delivering more units of drives, but delivering higher capacity drives to meet that storage requirement that we're seeing just continue to accelerate from our customers.
I remember we talked about that last time. You said we can meet demand by having higher capacity, not just a higher kind of number of widgets, so to speak.
Correct.
So I want to back up and make sure I've got this story right, because it's quite a story. You took over in early February of 25, is that right?
That's correct.
Okay, as part of the spin-off or the split between Western Digital and SanDisk?
That's right. We spun out SanDisk in February the 24th.
Okay. So if you look back, the performance, I mean, we talk about SanDisk all the time. It's up, I think, 1,200%. Western Digital's up 400%. Do you think the split is now justified by what we've seen? Because you have a flash play and yours is more of a pure hard drive play. Should they have stayed together? I'm just curious. I mean, I don't know if anyone, yourself included, or saw quite this level of explosive demand for memory coming.
Yeah, I think that the split was the right thing to do. It really created two pure play companies, one in the memory space through SanDisk and one in the storage space through Western Digital. And that singular focus on each of our lines of business, I think has really strengthened our ability to better support and deliver the technology and to enable our customers to really take advantage of the massive demand that we're seeing being created from AI. So definitely the right move. Now, obviously, on hindsight, do we think we would get the explosive growth that we've seen? We wish we had a crystal ball, but definitely the right decision, and it's panned out in terms of how we've seen the reaction both to the stock price and the performance of both companies.
And we spoke with Mehdi Hosseini a little bit earlier this week and asked him about kind of the stocks that he thinks are best positioned right now after the crazy runs that we've seen. He actually, one of his favorites is SanDisk, is this flash, and he said it's the tokenization phase of AI that he thinks will drive ongoing utilization of flash. I'm just curious if you agree with that or have kind of a broad take on how we're moving from the build-out phase of artificial intelligence to the usage or the tokenization part.
Yeah, so if you bring it back to what we provide at WD, we provide storage, right? And the driver of storage over the last 2 years has really been from AI model training. So it requires a lot of data to actually train models. And what we're seeing going forward that's driving the incremental growth rate that I just highlighted, going from 25% CAGR to 30% CAGR, is really threefold. That ongoing demand for data storage from model training and retraining of those models to get them to be even more efficient to deliver better quality results. We're starting to see that demand now for storage coming from inference. 2/3 of compute workloads this year are expected to come from inference. Every inference workload will result in more data being generated that requires more data to be stored as well. And the third piece is from physical AI. Physical AI, whether it's in robotics, autonomous vehicles, there are limited data sets to actually train physical AI. So if you take an autonomous vehicle as an example, there's only so much weather data that you can capture. There's only so much video data you can capture around what's happening in terms of traffic conditions and so on. So they're using a lot of that data sets to use AI to generate synthetic data, to create enough data to better train and enable this physical AI model. So the combination of these three things will continue to drive a lot more storage requirements and propel the growth for storage going forward.
That's fascinating. Is it true that your margins are like 60%?
We've just reported the current quarter at 50.5, and obviously we see demand continuing to grow. We also reported a 9% increase in pricing. And our focus is really to ensure that we provide predictable pricing to our customers and avoid volatility in terms of what we deliver. So they're better able to design their architectures for storage in the long term to better be able to meet the growth in demand for storage and to be able to price predictably to their end customers as well, to the Anthropics of the world, to the OpenAIs of the world as well.
Is 9% pricing conservative, Irving?
Look, I think there's a lot more opportunity for us to continue to expand pricing. And the way we've structured it is to really focus our ability to drive pricing in a predictable way through the delivery of better value to our customers. Our focus is really to continue to deliver better total cost of ownership to our customers. And we do that through a combination of delivering higher capacity drives and better performing drives. So every time we're introducing a high capacity drive, which we will be doing the second half of calendar 26, that delivers better TCO value to our customers. That's an opportunity for us to increase pricing.
When we hear Apple CEO Tim Cook saying, they face supply constraints in the memory front in the quarter, he says it'll drive an increasing impact on our business and that we'll continue to evaluate this. Do they have a lot of other options to evaluate or, look at cheaper memory options, different kinds of ways to kind of use processing on the phone? You know the technology more than I. What other options do he or other of your potential customers have?
Yeah, if you look up and down the AI stack from compute to memory to storage where we play, there's a lot of that's happening to see how greater optimization can happen, right? You've seen and heard of things like TurboQuant more recently or many other similar software tools that drive better efficiency in terms of the use of memory in terms of inferencing as an example. So we're going to continue to see innovation up and down the stack, be it both on the hardware side and also on the software side to drive greater efficiency. We think that's actually a very positive thing because the more efficiently you can use memory, for example, that means you can drive a lot more inferencing. A lot more inferencing means a lot more data getting created, and that means a lot more storage that needs to be there to support that as well. So that's very positive from a WD perspective.
I forget the term for it, but you lower the cost of something, you actually create more demand for it, and I think that's what you're talking about.
Absolutely.
OpenAI has had some well-documented struggles recently, and obviously they're a big client on the data center front. If they have to pull back, would that be a risk to the business?
We don't see that being a risk to the business because we see demand right now outstripping supply. So if there's a shortfall in demand for one particular AI lab, we see that being easily taken up by others.
And does the shift overall from GPUs to CPUs have an impact on memory demand, on storage demand?
No, it doesn't. At the end of the day, it's all about the fact that whether it's GPUs or CPUs, which are going to be used a lot more in inferencing, what happens is all it does is it drives more data creation, which in turn creates more demand for storage. So it's a very positive flywheel and something to just recognize when it comes to storage versus memory or compute. If you take at tokens, for example, the underlying resources that create a token are memory and compute. Those resources get reused, once you finish a token gets expired because it runs an inference workload or it's used for memory for model training. Once that model is done, you can recycle the assets there. It's not the case for storage. The data that's getting created from an inference workload or from a model gets stored and it's persistent. It's not getting deleted because of the value of data. And so the data that's getting created and the requirement for data storage is just compounding over time.
Yeah, I'm thinking about my Google Photos. Not a perfect analogy, but
but a very good one.
Yeah, the amount of storage. Sometimes I just need to go through and delete these, but it's hard. I just want to go back. Well, one quick question before I do. On gross margins at 50.5%, do you guys see that going substantially higher in the future? Could that come down amid kind of customer pushback, or where are we in the cycle for you to have gross margins around that level?
So I think as we move forward, there's a lot more opportunity for gross margin to continue to expand, even as we drive greater value creation through total cost of ownership reductions for our customers that will give us the opportunity to share in that value creation in terms of pricing. Obviously, we're very focused on cost downs as well. Last quarter, we had a 10% year on year from a cost down perspective. So if we continue to deliver value to our customers, being able to price up, manage our costs very effectively, we see ongoing opportunity to drive gross margin expansion.
All right, and finally, I just want to circle back. You guys have such a hard job of running these businesses. I get to just sit here and kind of look back and Monday morning quarterback them. ChatGPT launched in 2022, and in 2025, I think it was, you said you split, Western Digital and SanDisk. Did you see the tsunami that was coming? Because we have traders and guests here all the time shaking their heads going, man, if I had just seen this coming. This is one of the biggest, stock market rallies for these. It's hard to, I don't know what your company's analogy is, but we had a company the other day going from making, like $1 in earnings per share to $100. I mean, I'm exaggerating a little bit over the last couple of years, but things of this magnitude don't come along that often. Did you anticipate this tsunami a couple of years ago when you split the business? Was it just a coincidence or fortuitous timing? Or can you just talk a little bit about that?
Yeah, it's an amazing time. Just like EPS, we've almost doubled our EPS year on year. But I wish I could say I was prescient and I could feel that we were going to the AI trade was just going to explode. But look, we had an inkling of it, but the pace of which innovation has happened, the pace of which AI has happened, and more importantly, the confidence that we're seeing going forward in terms of the monetization of AI and the business opportunity of it and the impact that it can have to businesses, it's really unprecedented. And we're doing our best to really catch up, but now that we see the potential of it going forward, we're definitely investing for the future to be able to support the demands for storage that we are seeing continuing to increase going forward.
All right, 30% growth rates, you think now, versus 25. So it doesn't appear to be slowing down yet. Irving, thanks for making the time joining us today. Really appreciate it.
My pleasure.
Western Digital CEO Irving Tan.